Okay, guys. Um, Morning. Yep. Welcome to Josh FX Pro. And I'm gonna see you. I told you in the last video when we talked about sorry, I'm mixing up things. My head is not here. Okay, so now we're back. All right, I'm here now. Yeah, so I told you in the last video when we were talking about trading range, right? That I was gonna make you a video for chart patterns. So this is that video for chart patterns. And I want you guys to pay attention for some of there are so many chat patterns, actually. There are so many. I think I'm going to come up with, I'm going to, should I do that? I don't know yet. But usually what I would love to do is I can't, but okay, see what's going to happen. There are some books that I want you to get. I'm struggling with if I should do or not. So there are some books I want you to get. So there's one they call And I think it's easy to download. Yeah, it's actually easy to download. Chat patterns. I'm trying to look for that. Come on now. Come on, come on, come on. What's this? So it's called the Encyclopedia of Chat Patterns. Okay, I'm going to look for it. I'm going to look for it here. The in the Encyclopedia of Yeah, so this is how the book looks like. It looks like this. You could get the PDF form, either like that or like this. Yeah. So you could get the PDF of the book. It's free to download. It's actually free to download. PDF. Yeah. Okay. This is one. I don't know if this is going to download or if it's going to open the page. Uh, let's see. Or you could always come back to the second one. Thomas N. Bulkowski. Bukowski. Okay. Apparently this one didn't open. Yeah, so let's see this one. Bukowski didn't open. Yeah, this is how the book look like. I think there's a place you click. I used to have this book actually. I used to have the book. I hope this is not just the table of contents. I used to have this book. I don't know how come the book got missing from my library. So this book just tells you everything you need to know about chart patterns. Yeah, it talks about the double top, broadening bottom, broadening tops, and double top, double bottoms. If you check the table of contents, you're going to see them there in the table of contents. Okay, so let's just go down a bit slowly. Where are they? Okay, wait, wait, wait. Okay, these are broadening tops, bottom, bottom. Bump and run, cup and handles, diamond bottom, diamond top, double bottom. See, this is double bottom. Yeah, this is double bottoms, double tops. Yeah, and they have triple bottoms to triple tops. So also flags. So I'm just going to give you um just a few of the ones that we use. Yeah, I'm going to give you a few of the ones that we use. This one is still not open yet. Well, that's fine. So just go get the book, go download it, see if you can get the PDF. So for me, I wouldn't suggest you read the book. I would suggest you just look through the pictures and see how they look like. But over here, I'm just going to give you a few of the ones that are frequently showing up in the market, right? Yeah. All right. Yeah. I'm going to give you a few of the ones that are frequently showing up in the market, and they are always there. Yeah, they are always there in the market. So let's look it up. Let's say USD JPY. So let's talk about flags, for example, now. So flags are simply um, kind of like a trend in trend. When you have an opposite trend a in the other trend. For example, you have an uptrend in this case now, and you have inside the uptrend, you have a little downtrends. Yeah, so those are usually called flags. So it can happen that way. It could also happen from a downtrend. So you have inside a downtrend, a whole downtrend, you have little uptrends in the market. So when market keeps making other uptrends in that market, in the full downtrend, it makes little uptrends. It is called flag. Okay. So in this case, you see this situation here. The full market is on a downtrend, but we have a little uptrend inside the downtrend. It's kind of like what you call trending trend. Trends inside a trend. All right. So the same thing goes for the flag, for the uptrend. So you have a full uptrend market. The market is making some little downtrend within that uptrend. Those are called flags. So in case you missed that and you want to know what it means, just look for a trend. When you get a trend, you will see other little trends inside the trend. It is called, so once it's just opposite the main trend, once you have a trend opposite the main trend that is smaller than the main trend, then that is called a flag. Okay. So a flag that you see in a higher time frame, let's say this is 4 hours. This flag you're seeing here in 4 hours could also be a main trend in lower time frame, like 1 hour or 30 minutes and thereabout, right? So that is just the thing. That is what flags are. Now let's talk about heads and shoulders. Heads and shoulders. What is, when you hear the word heads and shoulders, you already know what it means. It means your shoulder, your head, and your shoulder. So when market forms something like this, let's see, something like this, there's a shoulder, your left shoulder, the head, then your right shoulder. Yeah. So you see how it looks like the way a human being head and shoulder or structure. If you're standing, this is how it looks like. So your shoulder, your head, and your shoulder. Then you could also have it in the opposite direction when you have a shoulder here, a head here, and another shoulder before. Oops, this my shoulder is too long. Okay, so you have a shoulder, a head, and another shoulder here. Yes. So you could have them like that. So you could have them on either the normal head and shoulder or the inverted head and shoulder. All right. So let's look up some structure. So why candlestick focus on the candle? Um, um, chart patterns focus on the chart, right? Not the candles itself. What is the structure of the chart? What does it look like? So let's look at one here. We have one here. We have one here that presented us a shoulder, came back to the neckline, gave a head, came back to the, that sounded weird, to the neckline, and also gave the right shoulder. All right? Yeah, gave the right shoulder. So that is what it is for here. So you could find this in several places. You could find it here as well. So you can see the little shoulder, a head, and it is, so the idea is that the head is always the longest or the most protruded, yeah, than the two shoulders you get. So this is also a bullish head and shoulder, just like the other one we saw. Okay, this is a little head and shoulder too. There's a shoulder, there's a head, there's a shoulder, right? So this is also a very big one, a shoulder, a head, and a shoulder. Yeah. So you could see this over and over. Okay, this is a bearish head and shoulder. You have a shoulder, a head, and a shoulder going down to the downside. So the idea here is when you catch it on on the last shoulder, then you trade it downwards. Same thing with this one. When you catch it on the last shoulder, which is not as high as this other shoulder, you trade it to the upside, right? Same thing here. You catch it on this last shoulder, which is not as high as the head, but almost on the same level of the other shoulder. Trade it to the upside. So that is head and shoulder. Now the next one is double bottom or triple bottom or double top or triple tops. All right. So when you talk about double tops, triple tops, you're talking about charts making what's that thing? Yeah. You're talking about chart making tops that are equal or almost equal on the same level, right? This is an example of a double bottom. When you have markets um touch the same place twice, that is double, right? When you have it touch the same place, why is this in all the way here? I don't want to look for you. When you have it touch the same place um three times, twice, yeah. So this is a triple top, yeah, triple top. So this is an example of a double top. This is an example of a triple top. You could also have um you could have it on the other way, inverted as a double bottom, yeah, or you could have it as a triple bottom, triple bottom. So, yep. So you get, so the idea is when you catch it on the last leg, on the last, what do you call it, on the last top or the last bottom, you trade it up or you trade it down, right? Same thing with this double top, bottom here. So this is an example of what it is. Let's look at it. Let's look for it. Let's look for these things in the chart. Okay, so for an example, we have market retests in this area, yeah. So in this area, we have market come here, give you this point, and also come here, give you this point. All right, so this is an example of a double bottom. It came down, tapped on that area, left, came back again, tapped on it, and also left. So this is also another example of a double top. It tapped in here after a break, came back there again to tap in that same area. Yeah, in this same area too. Yeah. So it could also have, you could also count this as a top. Yeah, cause so it made like a one, two, three tops before shooting down. Yeah. So you could see this in several places, but understand that these things, these chart patterns are best seen in zones, in your supply demand zones. They are best seen there. That's the place where when you get it and you trade it from that angle, you're going to be profitable overall. So wherever you're seeing these chart patterns, they have to be zones. They have to be an area of support or resistance or zones in particular. Okay. So you just have to know that these things are always there, but they are always there. You could be in a downtrend and you're seeing an inverted head and shoulder to go up, and it could be a manipulation. Actually, it could be a manipulation. So, but then when you know what you're looking for, when you know the trend you're on, make sure you're on the right trend, you're following the trend, and make sure you're taking these positions from an advantage point or your an area of interest, which is your zones, support resistance zone, this is obviously, this is a good zone. So market came and tapped in, yeah. So make sure you're taking it from a zone. So double top, double bottom, they are the same thing. You could see them everywhere. Let's look for another one. Let's look for another one. So we have, just like, I know we talked about support and resistance and how to mark out your supports and resistance areas. If you check my video on the support and resistance, you're going to see it there. And some of those um, ways is the double top and the double bottom. You get the two ways, one of the two ways you could find your support and resistance, you could mark it out, is that double bottom and the double top. All right, that's one of the two ways. So let's do this again. So we have here, Hmm. Sorry guys, I'm just tired. So we have here a zone. This is a zone. There was a rejection, break. The market came back to give you a double top. You see, this is the top, this is the top. It came here, tapping to this area. tapped into this area here. Here. So it tapped into this area here, 1, 2, and boom. All right. So yeah. So in this case now, this is where you wait for your last confirmations to trade the market. So in this case, you wait for a candlestick pattern. I know we've talked about candlestick patterns here, right? You've talked about it in this channel. Yes, we did. Look at it here. So if you notice that one place that you can always find, if you notice when you see a chart pattern like this, the last leg as a confirmation usually is a candlestick pattern. So you could always see this is a star, an example of an evening star to sell. If you go down to the former one we got, you get to see tweezers. This is a tweezer. This is also an engulfing. Yeah, so the last leg usually is something. This is a tweezer here too. The last leg after the last tap, you see a last tap, first leg, second leg, you take it up. So you take it from this advantage point of the candlestick confirmation. Yeah. So the candlestick is kind of like your last confirmation. Candlestick and chart patterns are kind of like your last confirmations before you enter the trade. So there's a lot of things. I'm going to talk about checklists, and most of the things I've discussed here now, I'm going to be putting them in a checklist. So you see how to analyze the market and um, actually go wait for the market and see confirmations. It's like a checklist, the things you need to look out for before you enter a trade. That's what a checklist is. So I'm going to make a video about that. Writing it down so I don't forget. Okay, so yeah. So if you enjoyed this video, you could go back. If you want to learn these things, go back and find them on your chart. Keep looking for them, keep searching, keep looking for them. When you see them, and make sure you're looking for them in a zone. So before you're going to say this is a valid chart pattern or valid candlestick pattern, make sure it's a zone. Draw that place as a zone, then get your chart patterns that are figured that are showing up on that zone area to either buy or to sell. So there's only two directions of the market. Either it's going up or it's going down. So you could see a chart pattern that is going down, and you could also see the same chart pattern going up. All right. So the more you study these things, some of the things that happened to me while I was learning as well is I see other patterns that haven't been named. You get, I see other chart patterns that haven't been named. So what happened is I give them a name so that because I see that they've been repetitive. They've been showing up every time in the market. So the thing about this market, the market always repeats itself. That's one thing you should know. Markets always repeat itself. So whenever you see these things, just make sure it is sure, right? Make sure it is sure. So you see this head and shoulder, this is a head and shoulder pattern to the downside. So, but you see that it actually happened on a zone. You understand? It actually happened on a zone. So when you see a head and shoulder like this, make sure you're first picking out the zone where it happened in before you're now saying, okay, this is it. So, all right. If you enjoyed this video, give it a like, thumbs up, and then if you have any question, drop your comments on the comment section and share this video, subscribe, and turn on your bell notification. I'll see you guys in the next video.